thus far have been, and often looked upon as mutual funds for real estate sector, isn't it? REITs allow real estate developers to capitalize on upcoming projects even before buyers or lessors have booked properties. And now with Embassy Business Park REIT going on with an IPO, will this trend only move up from here? And what does this do for large real estate companies which have current or potential large retail rent yielding assets? Let's ask this question to the Executive Director at Brigade Enterprises, Nirupa Shankar. Nirupa, good having you. Thanks much for joining in.
Hi, good morning, Neeraj.
A very good morning to you. You know, I remember 2007 or 2008 when the first gush of real estate IPOs came in, and then everybody started talking about how REITs were going to be the future. It's been a decade since then, but we've finally seen the first of the REIT structures get great response. Is this good news for companies such as you and a few of your peers which have current and potential rent yielding assets?
Yes, absolutely. We've all been looking forward to the first REIT coming into the market. I think it's exciting for the entire industry and beneficial for the entire industry as well. And that's why I think you've seen some of the real estate stocks shoot up as well. You know, for large developers like us, it certainly helps because it brings in an added liquidity to our stocks, and there's visibility to some of the valuation of our large commercial portfolios as well. Otherwise, the only way to seek valuation was to either do an IPO or, you know, if we are to get an exit, the only way was an IPO. A REIT gives another way for investors in large commercial projects to also make an exit.
Interesting. Okay, so let's talk about this a bit with regards to your business as well. You have, yes, residential is a large portion, I reckon, of your overall revenue and portfolio as well, maybe 75% of residential. But does this is retail and rent yielding assets any which way is looking like making a bit of a comeback? When I speak to some of the real estate consultants, all of them seem to suggest that the last 12 months have been better for commercial as opposed to residential.
Yes, I think commercial property has been hot of late. It's counter-cyclical to the residential market. Developers like us, for instance, Brigade has developed about 10 million square feet of commercial office space, and we are in the process of developing another 11 million more. The idea is obviously to amass a certain scale before we look at an option like a REIT as well. But there is definitely interest in commercial right now. It's doing very well. Any pre-lease property is being snapped up in the market. And even under construction commercial properties are seeing a lot of buyers.
Interesting. And by the way, I was looking at some reports that came in from brokerages with regards to Brigade. I think the current capacity versus the proposed addition by FY21 of commercial space seems to be fairly large, and even the leasing income as per brokerages compared to what it is right now to what it could be in FY22 is fairly large. Can you give us some sense, Nirupa, about how do you expect to expand that side of the portfolio? And if indeed you would look at a REIT structure successfully, does that give a further leg up to the ambitions that you at Brigade might have?
Yes, absolutely. So we're in the process. So we have 3-4 verticals, right? Residential, hospitality, office, and retail. We're definitely looking to scale up our annuity income portfolios. For instance, the office, retail, and hospitality. We're definitely looking at creating a larger portfolio of each of these 3 verticals. And eventually, when we're ready, you know, we could potentially look at combining all 3 assets or going individually for each of these 3 verticals.
Interesting. You reckon that because you have a better sense, you mentioned that this is counter-cyclical to what's happening in residential, what's happening in commercial. You reckon this has a bit of a long-term move feeling to itself, or is it difficult to confidently mention about what could happen to commercial real estate? Because when I look at anything in regards to jobs or anything in regards to GDP numbers, it's not looking all that great. So therefore, it's counterintuitive as well as to why is there so much of excitement in the commercial space wherein the base economy numbers are not looking all that strong.
No, I think overall, Bangalore is one of the strongest markets, not just in India, but across the world. So at least Bangalore is doing extremely well. Even Mumbai and Delhi are doing fairly well for the commercial sector. It's not the same. Hyderabad is also seeing a lot of good pickup, potentially Pune and Chennai as well. But those are the main markets, right? I think the tier 1 markets are seeing a lot of uptake in office space, and it may not necessarily be the same across tier 2 and tier 3. So there are just few pockets in the country that are doing extremely well when it comes to office, the office portfolio. So, and it's a basic function of a lot of companies expanding their businesses, and it is a function of the economy as well doing well.
Okay. So I would reckon that quality players at premium locations and in tier 1 are probably doing better than the rest of the country. Are they doing well even when it comes to liquidity? And my question to you would also be around the cost of debt, because the widespread belief was that liquidity will dry up, cost of funds will go up. It's gone up for NBFCs for sure. Your borrowing sources may be banks and a mix of NBFCs too. How has that picture been for you?
Yes, I think cost of funds is certainly increasing for many players. Luckily for us, we've been very prudent with our financials. So we've only been, by and large, I would say almost all of our debt is from institutional banks, and we've been able to get it at very competitive rates. And I think it's just a function of financial prudence. But yes, for most of the market, it is pretty expensive. Debt is coming in at pretty double-digit figures, and equity as well. But for us, we've been able to keep it under control, and that's a function of being prudent over the last so many decades.
Well, touch wood, I hope it pays up even better dividends for you. My final question would be on this recent foray that you've done, Buzzworks. I believe 2,500 seats across 7 locations in 3 cities. Start of many such things, or is this a one-off experiment?
No, it's not a one-off experiment. I think we've been hearing a lot about co-working, and the co-working market has certainly boomed in the last 2 to 3 years. In 2006, for instance, 2016, the Bangalore market had about, I think the total absorption was about 5% of the total office market, and now it's about 10%. And I'm sure in 2019, the total absorption of co-working compared to the entire market will be at least 15%. So I think it's a trend of, how we can expect the office space to move. Even traditional MNCs, like whether they're in tech or e-commerce, they are looking for some amount of co-working space. So people are apportioning at least 15% of their total office portfolio towards co-working, and even traditional companies are moving this way. So I think it's a complementary feature to what we have. We have been doing traditional leasing. We've been doing the fit-outs for the clients, and I think the next step is to provide them with managed offices or plug-and-play offices in the form of a co-working space. So it's just a natural extension of our business, and the way we look at it is some sort of a forward integration of our business.
Great. We wish you all the best for this and more. Thank you so much, Nidwa, for joining in today and giving us your thoughts. Really appreciate your time.
Okay. Thank you so much for having me.